On its very first day of trading, this fund did something no leveraged ETF in American history had ever done. And about 2 weeks later, it had already lost a quarter of its value. Both of those facts come from the same piece of math. This is RAM, the Roundhill T-REX 2 times long DRAM daily target ETF. It launched on the 24th of June, 2026, and it is built to deliver 200% of the daily move of DRAM, the Roundhill Memory ETF. Read that again, because it is the strangest thing about this fund. RAM is not leveraging a stock, it is leveraging another ETF. It is a fund on top of a fund. The debut was staggering. RAM traded roughly $385 million on day one. That is the largest first-day volume of any leveraged or inverse ETF ever listed in the United States, beating the previous record by more than $100 million. On day two, it traded $742 million. Why the stampede? Because DRAM has been the trade of the year. The Roundhill Memory ETF launched in April and ballooned past $25 billion in assets, riding the memory chip shortage, feeding the artificial intelligence build-out. Traders wanted that trade, but louder. RAM was the amplifier. Here is how it actually works. RAM does not own DRAM. It uses swap contracts with banks to manufacture 2 times exposure, and it resets that exposure every single trading day. Not every week, not every month, every day. And that daily reset is where the story turns. Because leverage resets daily, RAM does not give you 2 times DRAM's return over any period longer than 1 day. Your returns get compounded day by day, and in a choppy market that compounding works against you. It is called volatility decay. Now, watch what that looks like in the real world. Since RAM launched, DRAM has fallen roughly 10%. 2 times 10% should be a loss of about 20%. But RAM did not fall 20%. It fell more than 24%. That extra 4 points did not go to the market. It was eaten by the daily reset. Let that sink in. You can be exactly right about the direction, size the leverage exactly as advertised, and still lose more money than the math promised. That is not a bug. That is how the product is designed. RAM also carries a 1.25% expense ratio, which is steep, and it sits on top of DRAM's own fee. You are paying twice for the same theme. So who is this for? Traders. People who buy in the morning, watch the screen all day, and are out before the close. Used that way, RAM does its job precisely. Held for weeks, the daily reset quietly grinds your position down, and the tail risk is real. If DRAM ever fell more than 50% in a single trading day, RAM holders could lose their entire investment. So here is my question. Would you ever hold a 2 times leveraged fund for longer than 1 day? Or is that a line you refuse to cross? Tell me in the comments. If this helped, hit like and subscribe for more ETF breakdowns, ticker by ticker.